What's going on, everyone? Shalon Winter here, aka Future Sniper Beast. This video is going to be a trade review from the morning session, and this is for Monday, January 6th, 2025. I wanted to do this video because, well, first of all, I didn't take a trade this morning, but the framework was really nice, and I kind of want to do these more often, whether I take a trade or if I feel like something is of good value that I saw in the morning, or there might be some learning lessons, kind of a recap of my trading session. I want to do these as often as I can. It might not be every single session that I trade, but I want to do these fairly often because there's a lot of times where I know I'm like, man, that was a good session. That was a good stream. That was a good trade. There were some golden nuggets. And, the video itself, the live stream, the replay will be like an hour long, 45 minutes, whatever. So for everybody to sit there and have to, go watch the whole thing, I know not everybody's going to play it from start to finish. So you're probably going to miss some of the good stuff, the golden nuggets and the good information. So I figured let me just do a recap, kind of like a 10-minute quick session of what I saw in the morning, why I took the trade I did or why I didn't, whatnot, if it was a good learning session. So that's what I'm going to do. If you feel like that, that would be valuable to you, definitely let me know. Let me know in the comments if you think that's valuable. Hit the thumbs up if you think so. And because, I think it'll be good. If you think it'll be good, I would love to keep doing them. But hey, if not, then, I won't. But I think it'd be good for everybody. So that's what I'm going to do here. I want to show what I saw in the morning. Price delivered pretty well this morning, actually, even though I didn't take a trade. And I'll explain why. So let's jump right into the charts. All right. So we're looking at the 1 minute chart here. We had on the daily chart, we had a SIBI, which is a bearish fair value gap, basically. And here was the low of it, this line that I marked. And here was the consequent encroachment, the midpoint of it. So what I did was I basically took and this, by the way, this video might be a little longer than the 10. I want to keep these around 10 minutes, but because I had to explain at the beginning of the video what I'm doing, that took a couple of minutes. So bear with me. So basically, I'm kind of mixing in the 2024 mentorship with the 2022 model that I already know. So what I was looking for this morning is I marked out my 7 a.m. I marked out my 8 a.m. and I marked out my 9 a.m. times. Okay. Now, also what I do, so I'm breaking it down in those three sections. I don't start trading until the open, but I want to look at the daily, the higher time frame charts still for my bias. For some time, the key levels. I'm looking for some key levels. Like here we have that fair value gap, right? Pushed right into it. We have an order block right here. The daily chart. Look at that. Closed right at the order block and dropped. We took this low barely. Okay. And left a fair value gap right here with the volume imbalance. So you have to include that in the fair value gap. Price is pushing up. Okay. Wait, let me get rid of these first real quick. These three, because it's kind of overlapping on my daily chart here. So as you can see, price is pushing back up. And what do we have right here as well? Okay. This pushed into the gap, into that fair value gap. So this could be an order block right here. Where did price reach up to today, this Monday? Right to the midpoint of that order block. And we'll see if it drops now and instantly rebalances this right here, where it pushes up into the order block, and see if it continues to drop through this sell side liquidity. That'd be what I'm looking at on the daily chart. But right now what I'm doing is I'm just marking the key levels on the higher time frame. And then on the 15-minute chart, so basically what I did here as well is in the morning, this is what it looked like. Right? Here's 9 a.m. So let me go ahead and put this 9 a.m. back here. Oh, I'm sorry. That's on Friday. Let me scoot up. Here we go. This is where we were. Right here. Here's 9 a.m. Okay. And here is 7 a.m. So between the two, what do we have? Look at that price action. Do we have relatively equal highs or relatively equal lows? No, because this wick right here took these lows. So we did have some there, but this wick took the lows. I do want to note this fair value gap we had on the 15 minutes, so I marked that out. Okay, we had that 15-minute fair value gap. And you got to think, this is 9:15 right here. This is 9 o'clock. This is where we were, basically looking like this. Okay. I could go into market replay so I can go bar by bar, but maybe I'll do that next time. Let me know if y'all would prefer me to go bar by bar in market replay, or if it's better like this, how I'm just kind of doing it. So I see this price action, and immediately I'm like, okay, we don't really have relatively equal highs or relatively equal lows. Like it's not looking good here after 7 a.m., right? It's not looking good. Like it is, there's nothing. So I note this high and this low because that's the highest high and that's the lowest low. So let me go back. So then I want to drop down to the 5 minute, and then let's see. After 7 a.m., put these back. After 7 a.m., do we have relatively equal highs or lows? See, again, I'm already at 9 o'clock looking here, right? So, like, I'm already looking after 9 a.m. So I look back, and I'm like, well, this is kind of like we have a bunch of highs and lows here. But then again, here's that high, and here's that low I'm marking. Like, I'm taking note of these. And let me mark it out so we can see. Okay. So I'm going to mark. So I marked these out. High and low. All right, so let's drop down to the 1 minute now and see what we see. This is basically what I was looking at this morning. All right, so after 7 a.m., do we have relatively equal highs? Well, yeah, we had some here. This one's kind of high, pretty high. But we had some here, relatively equal highs. And then what did price do? Ran up and took those. So this was a run up and stop hunt here. Okay. So after this run up in this stop hunt, price is likely to trade back down here. I called all this on my live stream. Price is likely to run all the way back down to this low. Down here. That's where I'd be looking at for the range, the pre-market range there. Okay. So then I look after 8 a.m. Was there equal highs or equal lows? No, I don't see any equal highs, but I do note that we have this fair value gap right here. That fair value gap right there, if it'll cooperate with me. Okay, so it's a 1 minute fair value gap. I note that one. So what did price do? We have basically some equal lows here, relatively equal lows here, right? So what did price do? Ran up into that fair value gap, dropped a little volume imbalance, came back up into that volume imbalance, and then took those relatively equal lows here. Okay, so that was the move after 8 a.m. And then now, here we are, like I said, at 9 a.m. Now I'm looking at 9 a.m. Have we made new relatively equal highs or lows? Well, yeah, right here. We have this high and this high. Those are relatively equal highs. Okay, so I'm looking at that. So now, from this point on, what I'm looking for is a delivery down to this low. Because we didn't get a delivery down there in the 8 a.m. hour, right? So I'm looking for a delivery down. So what happens? It's the same thing. It runs up, creates these equal highs. And also, the reason why I'm looking for a delivery down is because if I'm marking these highs up here, let me get rid of this, for price to run up through them, it has to manipulate first to the opposite end. So what I'm looking for in the first 30 minutes from 9 to 9:30 is the manipulation down. Okay. And if that happens, then so let me not get ahead of myself. I'm looking for the manipulation down. So we have this fair value gap right here. Get rid of that one. We have this one here. So it comes down right back up into this fair value gap. Okay. And then it drops. Where to? Right there, that low. It delivered well. Perfect. Boom. Hit that low. So now what I'm looking for is price to deliver up through these highs, through this buy side liquidity. And that's where I'm looking for a trade. So I could look. So it depends. Time is so important because after this happened here, I was looking for a run down. And this bar happened. Look at this bar at 9:15. So had this not displaced and run down to this low after the open of 9:30, then I could have taken a short down to here, right? I could have taken a short down to there. But we created these relatively equal highs, and there's no real lows, right? Like sell side liquidity, relatively equal lows. But it delivered down here. And so from there, after that happened, I was looking to go take a long back up through this buy side liquidity. And it made its way up there. But the problem is, here's 9:30. So after the open, that was this bar. And it closed up right here. Okay. So that's the problem is for me, I trade after 9:30. So if this was the open, that's the close right up there, this bar, then like we already ran through that buy side liquidity. So it all delivered well. Like there was nothing left for me. And that's why I didn't take a trade. Had this action happened, after 9:30, then I would have looked for an entry to run it up through there. But it happened all before the market opened. So at that point, there was really nothing left for me. The only thing is, price could probably run up to the middle consequent encroachment of this fair value gap. And it did. But at that point, I would have to look for an entry anywhere in here. And there were some entries. It just didn't really align with exactly how I take my entries. Like you have this one here. If you really believe price is going to get up there, which I wasn't too sure at the time if it'd get up there. But in hindsight, I said on my live stream it delivered well. It delivered great. But after it took these buy side liquidity, I wasn't sure if it would make it all the way up there. And so there could have been an entry here. There could have been plenty of entries up there. And also, if you look at, let's take the fib. Let's measure this low that we got to. And let's go to this high that we had. And let's go here, put some deviations out. That's how you have targets. If it takes these buy side liquidity, it delivered well to the sell side. You have a reason it could go up. You don't really have any more reason for it to go down. Then there's plenty. You could have taken this inversion right here. When price came back into it, hit it at this inversion going up. There are entries you could have taken. And then from this high, you have the 0.5 deviation right here. Right here where the SIBI is, look how it's, that's the one deviation. Right here, boom, hit it. Hit it. And then come down. So that's a way you would go for targets above the marketplace. But you'd have to really, I'm looking for this down here to take it up through buy side. That's the trade I'm looking for. And I didn't quite get that. So that's why I didn't take a trade. And then look at the 5 minute. Looking back, you can see the power of 3 right here. Right? You got accumulation. You got some accumulation right here. You got your manipulation. Let's go red for manipulation. Then you got your distribution all the way up. So like right there's your power of 3. So, and that's how you see it. Like, it delivered well. I just couldn't be a participant in it. So, and then in the video on the live stream, I talk about order blocks as well. So right quick, let me go into that piece so I can explain what I was mentioning about order blocks, because that was a crucial thing too. Here, let me get rid of this. So basically, as price ran up, this is the 1 minute chart again. As price ran up on this down candle, so right here, first of all, right here, I said there was an order block. Right here, let me change this. Okay, so this down bar, because it traded all the way down, created these equal lows into this fair value gap, and then price, went up, made higher highs. So right here, you can see it building support at the open of this candle, this down closed candle. You can see it building up support. So it's telling me this is likely an order block at this point. And if I had this target up higher, you can enter in this area if you believe it's going to go up. And then it came up, went higher. And then you can see the bodies closed slightly below the midpoint, the mean threshold of the order block. But then it rallied, built some more support here. And then right here, we had another order block to push through these lows right here. And then it came up. And I was explaining how all these work as well. So then if I measure out this order block, this is what I look for. As soon as price closes, and I call this out live, as soon as price closes above here, you can look to enter and take a run up. And from here up, let's see. You're still going to get 45, 50 points out of that. It's a good trade. So then you just don't want price to close below the middle of this bar. So what happened is it did come up, left a little tiny fair value gap right there. And then it left a fair value gap right here. So you would look at this and say, well, will price overshoot this? Well, yes. It came right down into this wick. So you can mark the wick as well of the order block. But typically, if it has a long body like this, you'll use the body, but it doesn't have to go into the body. See, if you measure the wick, the high, middle, and low, it reached right down almost to the middle and then pushed up. So that would be a valid order block there to push it all the way up in there. So it was a great trading session, a great review session, and price delivered well. It just didn't give me my entry that I'm looking for. So, I mean, it is what it is sometimes. And then I mentioned at the end of my stream to take a screenshot of that, mark up your charts, be able to mark up charts like that often, and then annotate that and study it. And you'll see it repeating over and over and over. And then that's when you could take your high probability entries. And that's my plan. So anyways, that was my session review for this morning, January 6th. I did go over, we're at about 19 minutes here. So again, I want to keep these 10 minutes, I guess maybe 15 minutes if I really have a lot to explain or go over. But I really want to keep them around 10 minutes. So let me know. Would you prefer how I just did it? If they're even beneficial to you, how I just did it, or if you'd like me to do like a bar by bar. So let me know. Let me know in the comments, and make sure to hit that like if you appreciate this, and definitely subscribe if you're not subscribed. So I'll see y'all tomorrow morning, and as always, trade well, everybody.